What's up, guys? I'm Travis Patton from the Purposeful Trading Academy, and today I'm coming with a broadcast from my YouTube channel to come to you guys and let you know what penny stocks are and how I believe you would end up trading this over anything else in the world. So, before we get started, I want to read this disclaimer. It lets you know I am not a financial advisor. Please don't take anything in here as financial advice. And if you do, you are responsible for your own losses. You should go to your own financial advisor, find one if you don't have one, and get the information you want and or need about this. So this frees me up to talk about everything else I want to talk about because everything from this moment is entertainment purposes only. Let's get into it. We're going to talk about what penny stocks are today, what is day trading, why I only trade and not invest in them, and we're going to have a moment where you guys can comment below in the box. What are penny stocks? Penny stocks, they are stocks that trade under $5 according to the New York Stock Exchange. And so as this happens, you understand that the stock market is a little bit different than what you think because a lot of people thought only a dollar and under stocks were penny stocks, but that's not true. And the next statement is also a true statement. Potentially, you have the chance to yield bigger returns in one trade than at least a few years of investing in the S&P 500. All right, annually, the S&P 500 yields about 12% on a good year. And we know that the S&P 500 is usually pretty stable, 12%. But if you have $500 and you invest in the S&P 500 right now and you want to get 12% in the next year, you would end up getting $50 give or take back. Because we know 12% is actually a average. So it may be a little bit lower and a little bit higher. So let's just go with 10%. $50, that's your return. And in 10 years, you'll get 100% back on the investment, which sounds very great until you understand penny stocks have the actual ability to go up hundreds of percent within a few days or even thousands percent or sometimes within a few weeks. So think about getting a portion of that. Not all of that, but just getting 20%, 50%, 10%. If you average a 10% over time, 10%, 10% per trade, 10 times 10 trades would end up equaling 100%. Therefore, blowing out the S&P 500 by years and years to come as far as your annual income. What is day trading and how does it work? So, day trading. Day trading is from Monday through Friday. The pre-market hours are from 4 a.m. to 9:29 a.m. But most brokers only have the 8 a.m. slot to 9:29 a.m. slot, New York Standard Time. So the market hours are on the Eastern Standard Time, and that is from 9:30 a.m. to 4 p.m. After hours trading from 4 p.m. to 8 p.m. And the best time to usually trade for any stocks is about 9:30 a.m. to 4 p.m. when it comes down to trading penny stocks because pre-market and after hours they both trade the same. They both are extremely volatile, but they're only volatile and manipulative at points because not a lot of people are trading at those hours. Therefore, there is a lot more manipulation with people who are putting more money in. But during the trading hours, when there's a lot of people trading and there's a lot of volume, which means a lot of people are in the trade, whether buying or selling, they're in the trade, then that allows the stock to be more stable. Now to the PDT rule, which is the $25,000 per account rule. So if you have over 25K, then you can have unlimited day trades. But under 25K, you can only have 3 day trades per week, which is really not a problem if you understand how to trade these stocks. You can trade them in multiple brokerages. If you have more than enough money to put in multiple brokerages, you can actually end up having an increased amount of 3-day trades per week because it's per brokerage. And not only that, but you can also do something called swing trades, which we'll talk about in another video. It'll also allow you to get over the PDT rule, over the stigma of the PDT rule, and you'll still be able to trade more times within a week. So that's what that is. Trading penny stocks versus investing in. This is a big one because a lot of people don't understand. They want to think of investing as, just the biggest thing there is, but there's a time and place for everything. And so penny stocks is not the time to invest. It's not the time to invest. There was somebody who once said, don't save her because she don't want to be saved. 99.9% of penny stocks fail over time. And that's simply because they don't have the funding. Most of them don't have the money. They may have beautiful technology. They don't have enough money to stay afloat. That's facts. If you can look at multiple penny stocks and you can go to their financial sheets, you'll find something that says the annual income is negative net something million, which shows that they're in debt and in need of money. So anytime that their stock price increases, even though it can go up thousands of percent in one day, a lot of times they end up decreasing in the same amount of time within a day or two. And also they also do price offerings, which allow them to take that money from the stock, kind of like when you get the equity out of a house, just a different process. Um, but for a stock, it's not good for the holders of shares, but it is good for those who actually are in the company because they end up getting money and equity to continue to have the business stay afloat. So that's why I'm not long term in 1 year, 2 year, any type of penny stock because 99% of them fail over time, and I don't want to be a part of it. I want to be a part of the potential short-term reward, which we talk about next, which is like a wave. I want to be a surfer, right? I don't know a lot of people who've actually surfed, but I want to be one because in trading, I'm a darn good surfer. Surfers are people who find waves and they ride the wave. And that's what you want to do. You want to ride the wave. Anything that's hot, that's fresh, and has a particular strategy where you can see something fits in your criteria of trading, I want to trade it every single time because I know more than not I'm going to make money because of the process and because of that this huge wave is there. I'm not going to just fall off a collapsing wave 99% of the time. If this wave is a strong wave, then I'm going to be able to ride it for the majority of time. And that's what we want to do with stocks for the short term. I don't want to be a long-term loser. A lot of people hold these and pray that they come back. I'm sorry, you know, but that's just not wise. And in summary, penny stocks again, they're extremely great for momentum. Uh, like I said, if you capture more than 10% per trade over and over and over, you have the ability to create a compounding wealth mechanism that'll allow you to grow and over time. And yeah, there is a variety of different uh, outcomes, but at the same time, mm, if I get a 93, you get a 74, and somebody else gets 85, and another person gets 100, we're all passing, and we're just in different capacities, but we're all passing. So maybe we need to study more. Maybe we need to find out what we're lacking. But passing is passing, and that's the first start to it. And if you can, like I said, make 10% per trade on these trades that go up hundreds of percent, I mean, you can make quite a chunk of money. Um, Not that I'm implying you will, but there are 5% who make money, and I'm in that 5%. So it doesn't take anything that you wouldn't use in the real world. It would take all the effort that you just use. But once you learn the game, you know, it's easy from there. So yeah, guys, that's Purpose for Trading. First video here on YouTube, and I'm super excited because now I get to talk to you guys more. So subscribe, and I will be with you on the next video. Hope to see you there. Love you guys. Stay blessed.